Namaste traders, good evening. 16th of March 2020, Monday evening. And I thought I'll answer one of my followers' request. His name is Vinay. Vinay recently had posted a comment on my upload saying that why everyone is comparing this to the 2008 bear market. Please make an explanation video on this. Thanks a lot. Vinay, thank you for following me, following my work and my videos, and of course requesting me to share my thoughts on why everyone has started comparing it with the 2008 bear market. I'll come to your direct answers to your question little later, but before that I would like to share some basic differences which I can sense between the fall of 2008 and 2020 in its characteristics. Well, 2008 was an internal damage to the entire financial system worldwide, which triggered the fall across the globe, and it was an internal damage. When we compare that with if we compare that with the reason of the fall at the current juncture, it's majorly to do with the external factor of the COVID-19 virus, which is spreading and causing this kind of panic. Now, in 2008, it also led to a ripple effect across the world, which we saw in all the countries in Europe, US, and of course Asia. And a similar kind of a ripple effect we can see now also. But between these two ripple effects, there's a distinct difference. The issue in 2008, as I said, was an internal damage which essentially had broke the backbone of the entire system and which needed a lot of time. This ripple effect is more of in terms of slowing down things. It is essentially not making any factors go bad, but it's essentially slowing down the process of the economic cycle. If you look at the economic cycle in 2008, there were reasons why the cycle turned down, and of course it took time for the cycle to turn up again. But if you look at now 2020, the ripple effect is more about the cycle getting slowed down. There is nothing wrong with any of the parts of the cycle. It's just that its pace gets slowed down. And so in 2008, what it needed at that point of time was external help. When it's an internal damage, you need external help. When you've got fever, you need antibiotics. So antibiotics was given in 2008 in terms of printing money, subsidies, reforms, helping the economy go back to its feet with a push of money as well as demand. And that was an external help. But when you look at over here where we stand today, it's more of like a precaution. That's why things have slowed down. We are not willing to travel. We are not willing to meet. We are not willing to even step out of our house. So the economic cycle will definitely slow down. People are sharing selfies of seated alone in an entire jet plane. Roads are relatively emptier and getting emptier day by day. So of course, people are taking precautions. So in 2020, it's more of an internal prescription. In 2008, it was more like an external prescription. Now, because it's more like a precaution and things are slowing down in 2020, the rally when it comes, I feel the rally will be quick and it will be fast. We just need to, let's say, pray and hope that by the time it's time that the virus has eased off and the rate at which positive people are getting tested slows down, the curve will start to flatten and then come down. By that time, you don't want it to get really bad, as in the economic cycle should not slow down to a lot of extent that it finds that it goes into a sleep mode. So I feel that that's not going to happen, and I feel that the rally will be quick and fast. Now, coming to a quick check of 2008 and 2020. Now, this is the monthly chart on TradingView, and this is your 2008 to 2009 crash. And if I quickly draw the info line on TradingView, and I can see here, there you go, it's around 64% correction, little above 60% correction on a high to low basis, and took around 9 months. So we're looking around 60% correction that happened in 2008-9. If you compare that with the current juncture, in just 2 months, high to low, like 3 months, we are on the third month. We're down little over 30%. We're like 31.67% down. So now coming straight to Vinay's question, why are people comparing it? Because people are uncertain about what's going to happen. Uncertainty leads to fear. And when you are fearful, when you are uncertain, you try to look at, or you try to compare with whatever nearby you can find to make yourself feel little better. So if you are one of those person who have seen, experienced, lived through 2008-9, then you have experienced a bear market. So you know that this 31% can fall further to 50% as well as 60%. So in my recent video, I shared that I am expecting an 8K or a break of 8K, and the level where I'll go all equity will be when 7K breaks. If that happens, then we are looking at close to a 44-45% crack on the Nifty. It's highly possible, but I am thinking this, I am approaching this with a little pinch of salt, because it may not come all the way down there and may bounce back before that. I don't know, because prices behave the same, but the dance every time, or the drama every time, is a little different. It will come down. It is coming down. It is a bear market. But the drama, the way it is doing it, is different from last time, because the reasons are also a little different from last time. So, whether those levels will come or not, that time will tell us. But keep yourself open for these levels to come. Number one. Number two, straight away, as I was saying, why are people comparing this fall with 2008? And the main reason is uncertainty. When you are uncertain about anything, that will always give rise to some degree of fear within you. And if there is a degree of fear within you, you'll find yourself paralyzed or incapable to take decisions. You're not getting me? Let me give you an example. When you were young and you just finished your 12th standard in school and you were about to get yourself admitted to a college, and you had doubts whether you want to take up science or commerce or economics or anything else, if you found yourself to be uncertain, then you definitely looked around left and right friends and family, what are they doing, and you found yourself comfortable if you joined the herd and you joined your friends or family members, whoever has taken something. Whether you want to do it, whether you are whether that's going to be your strength or not, you don't know, but you will make a choice. I personally have seen so many youngsters just moving from one classroom to the other all throughout their life, and all they want is look left and right, whatever is the janta doing. If I am not too sure about what I want, I am uncertain and there is fear, because if I take a decision and if it goes wrong, my friend will go up the ladder and I will stay back. That's exactly what people are doing, because they don't know, uncertain, fear, what decisions to take. Let's compare it with 2008. So the relative comparison has started. That's exactly what we did right now. We compared the fall of 2008, the size of the fall of 2008 with the current fall, and it's a comparison. Comparisons are healthy as long as you don't get sold. So we can compare with 2008 behavior. As long as we are not sold, means as long as we don't expect that exactly the same way the prices are going to correct. I'll give you a classic example. Recently I had seen few posts on social media, especially I guess it was Twitter, where everyone or few of them were claiming that March, the month of March, for the last 10 years, FIIs have been super duper buyers throughout. I think 2009 all the way till 2019, every March FIIs were heavy buyers. So March 2020 also will be a blockbuster. So I was looking at the numbers on the Money Control website, and so far we are on the cash market, we are down 34,000 crores month till date. So if we do this, the moment we figured out that 10 years, I don't know exactly if it's 10 years or not, but it was a significant number. If every March FIIs were buyers, then don't sell yourself into the concept that, okay, the 11th year also, 2020 also March will be, FII will be net buyers. We still have few days to go, we don't know, but the patterns is what we look for. You're looking for a pattern. If your friend has taken up science and you check with him and he says, yeah, science is good, because if I take up science I can become a medical practitioner, I can become an engineer, I can become a pilot, etc., etc. You like the pattern and you're uncertain who wants to take a decision, rather follow. So it's comparison that comes into the picture, and that's why people are comparing with 2008. Let's say, apart from your career, you look at, let's say, a phone. You want to buy a new phone. Let's say you've been using a phone for a very, very long time, and it's been over 3-4 years. You want to change your phone, and you are probably like me, who's not extremely savvy about these mobile phones. Again, a little degree of uncertainty, which phone to buy. A little degree of fear also, because what if you land up paying a money and you buy a phone that you never wanted? So essentially, again, the decision point comes into the picture, where you're uncertain to take, or you're not comfortable or confident to take a decision. What will you do? The same pattern. You'll probably check with your friends or family, or go to YouTube and look for 12 different types of videos, and then come to a conclusion, okay, this looks good, I should probably decide. It's a similar pattern. So in the videos you will look, a guy will give you proper explanation of what the phone is all about, what it can do, etc. So you get a sense of it, you get an idea out of it. The moment you get some sense, you get some idea, your brain says, okay, doable. So you take the jump or the step and you take a decision. So essentially, when people are comparing with 2008, we are getting a sense. We're trying to get some idea. Okay, this is how bear markets behave, is it? Especially for those who have not experienced a bear market. Congratulations, now you have. Welcome to the group. And if you look at someone who's into the market for over 30-40 years, and he has seen the Harshad Mehta's sell-off, the Ketan Parekh sell-off, the IT bubble sell-off, the 2008-9 sell-off, and now you will see, अरे ये तो होते ही रहता है, it has probably sunk into them so deep, it will not bother too much per se. So the sense and the idea, and this is the reason, Vinay, why people are comparing the current fall with 2008. It's a typical human behavior. You do that, I do that, most of us do that. We should do that. But remember, don't fall for it, don't buy it. If it makes your life easier to get some sense and idea to take decisions, it's all right. But don't blindly believe that if 64% was the fall in 2008, this time will also fall 64%. No, I don't think so. It's going to fall as deep as 64% this time. Maybe in the 30% to 45% range, and it will bounce back. I hope my explanation is good enough for you. Vinay, do share your thoughts, and others, you too, share your thoughts. What you thought about my explanation. Till then, I would say observe the market. I would not say trade well, but I would say observe well, and of course take care of your health in the kind of a situation where we have found ourselves today. Precaution, and please take care of your health, your friends and your families too. Good night.